And we are so happy to have certified financial planner Derek Hodges back in the studio with us today. How are you, sir?
I'm great, thanks.
Yes, and thank you for taking the time to be here. We've reached the point where we have to talk about some important dates, is that right?
That's right.
Okay, so we're talking taxes. What should people know?
Well, you know, it's tax season's here,
Yeah.
okay, whether we like it or not. So once we enter the new year, we start getting all those tax forms coming in from our employers. So by the end of January, we should have W-2 forms from our employers. And then starting at very early February, if not in January, you'll get forms from your bank. So what I think, to get yourself in a great posture to get through tax season gracefully, take your old tax returns, pull your 2024 tax return out and look at it and say, hey, what should repeat itself in 2025? Did I change jobs? If I change jobs, I'm going to have maybe a W-2 come from my old employer, one from a new employer. I would start making a list of all the things that you think you should be receiving and just start checking those off. And if you don't have a complicated tax return, you might be able to file your tax return maybe by mid-February. But if you have some complicated things, like if you have a taxable investment account and it has maybe some complicated investments in it that require something called a K-1, you might not even be able to file by April 15th when most of us think we have to file. You may have to immediately think about filing an extension. So it depends on how complicated your return is, but certainly by early February, most of your tax documents ought to be in.
Okay, and also whenever we talk about the tax documents, specifically here in Missouri, we have the personal property tax. I mean, what do you do if you're waiting on the mail to send your personal property taxes and they're just not there?
Yeah, so personal property tax and real estate taxes are due by December 31st. So if you've not received those, I'd be calling my county collector and asking, hey, somehow my forms didn't get to me, I need to pay those.
And let's talk 1099s.
Yeah, so 1099s, you're going to get 1099s for a variety of reasons. If you have some self-employed income, so maybe it's some kind of side hustle where you don't have taxes withheld from your compensation, you'll get one for that. You may get them for interest on your bank accounts, investment accounts. You need to get those all in, and most of those will be in mid to early February. And again, barring any real complications, they should be in by then.
What about bank interest?
Early February at the latest. Probably even by the end of January you'll have those.
Okay, and what difference does the bank interest make?
Well, if you have enough of it, then that goes on one of the first lines of your tax returns, and that's just taxable income that you have to pay tax on, and there are no taxes withheld from your bank account. So if you have a lot of interest, you're going to have to account for that on your tax return when you file it for your April 15th deadline.
Maybe some people are watching right now. If you're watching, thank you, and I hope you did get this next question, but let's say somebody got a bonus at work. Are bonuses mostly going to be untaxed or already taxed?
Yeah, probably if you're a W-2 employee, almost certainly it's going to be taxed already. If you're some kind of self-employed person, that's just going to be additional compensation that you have to handle your taxes on. So just depends upon how you're structured with the place that you receive your income, but more likely it's going to be taxed.
And also you were telling us that there have been some changes with itemized tax deductions.
Yeah.
What are those?
Well, especially in states who have high, like Illinois, real estate taxes. There used to be a cap of $10,000 on those types of taxes. Now that cap has been elevated. So while many of us out there are going to only file standard tax deductions, some of us are going to file itemized deductions now, which when we go back to itemized deductions, that means we want to be mindful of medical expenses. We want to think about charitable giving, mortgage interest, and now these expanded tax deductions. So you have to kind of get all of those back together again, add them all up, and see if that's higher than the standard deduction.
Okay, Derek Hodges, a certified financial planner, thank you for taking the time to be here.
You're welcome.
All right, we appreciate you for sticking with us on Heartland Afternoon. We'll see you back here in just a few more minutes. Be sure to stay tuned.